Nathan Davis here with Community Lending and the More Than Mortgage podcast. I'm very excited to announce my good friend, Philip Rispoli, a.k.a. Philzilla.
Ooh, there
Welcome,
you go.
Phil.
Great to be here, man. Really, this is your show.
Exciting.
I love it.
I'm usually the guest with you and Jennifer, and now
it's been a long time.
Yeah, today you get to come see our podcast studio.
I'm excited, man. I'm excited to be here.
Cool.
And I'm moving and grooving to the funky beat.
You are. I don't have the background music to go with it, but our friends at home. Yeah. So Philip Rispoli, he is with mydigitallisting.com. The Taberski real estate team does a lot of real estate activity in Southwest Florida, especially in the Punta Gorda market, Burnstone Marina, Heritage Landing, and all throughout Southwest Florida. And the reason why I wanted to have Philip with us, Philip has a ton of data that he dives into on a frequent basis. And I wanted to ask you something because I watched a couple of your recent podcasts and some of the information you put out. You use two key words that you're kind of seeing in the market: affordability and value. Can you tell us a little bit about what you're seeing in the real estate market right now?
You picked the perfect day to have me in, didn't you?
I did.
Yeah, today's the 13th, right?
It is.
And 8:30 this morning, the CPI came out.
CPI.
And it came in a little hot.
Yes, it did.
So I heard that at 8:30 this morning. Of course, we're always grabbing data. And, the housing and energy side of the house is still keeping the inflation up. So a couple of weeks ago, I did one of my videos, and I talked about affordability. And affordability still being a challenge out there.
Yeah.
And so we've got... that's one of the biggest issues that we see. We see the interest rates continue to climb, and the biggest issue that we see isn't that the interest rate was sitting at 7 or about there. When it was stable, we were still pulling business in. Now, granted, on our side of the house, we've done over 50 deals. All of our deals, except for 2 or 3, were all cash.
Yeah.
So I don't have that stuff with mortgages.
Sure.
And any mortgages, and I got to kind of qualify that when I say cash, that's not 100% true. We do have quite a few new bills, and even though those are cash, those could be financed, and those are financed at a much lower rate than the standard, conventional loans,
right.
At 5.5%, 5.75%, because they're buying that stuff down.
Yeah, because the builders are using their techniques to make sure.
And they're paying a penalty at the stock market, right? I mean, their bottom line is taking a hit. Their stock is still going up, but people, if they look at their bottom line, they're down.
They have to do what they have to do to sell houses.
And that's exactly what's going on out there. So, but for the average Joe, affordability is a real problem out there, and that's because prices are high, still up there. And in a couple of our zip codes, we've got one of our zip codes that we do a lot of business in. The homes that are laggards on the market are being reduced in price, but they're now at what we call the normal level, which is about 35% of the homes on the market are being reduced, and that's kind of an average number out there. And one of the other zip codes, it's still in the high 50s, mid range 50% of the homes on the market are being reduced, and that's still an indication that prices are high, and they're trying to reduce that laggard inventory to try to meet the needs of the customers to try to get it out, get it sold. Inventory hasn't been rising, so the inventory is still stingy. We had a fairly light June and July. We're still selling, but it's been periodically busy. But we're now seeing that. Now that these rates are starting to climb, and that's the problem, as the rates climb, the people buying slow down, whether it's cash or not. They're just getting a little antsy, and so it gets even more spotty. So that's the problem we're seeing with affordability, is the prices are high, and the interest rates are really causing a fluctuation out there. So we need to get that stable. When we got a number like today where the inflation isn't coming down as they say that it's supposed to, and when they look at, most common people aren't seeing the underlying data, right? And the underlying data is shelter and energy causing the biggest problems of keeping this propped up. And it's supposed to, according to the feds, right? This is the half of the year that the rates are supposed to be coming down.
They were supposed to. If you go back and look at a podcast, I think I pretty much put a big bet on the fact that by the end of the summer rates were
were you in that?
I was one of those
there was a
who-
lot of but you aren't the only one. Everybody was betting that they were coming down, and now the bets are sometime in 2024, or they have to. Right, the election is, for somebody to get into the White House, they better get better.
Right.
Something like energy and housing, should
Pretty important stuff.
Should get in line. Otherwise, it's going to be a problem. So those are the kinds of things that are happening out there. And then you got the other side, which you can tell that there's an issue on the affordability side, is even the new home builders who have a large amount of homes in waiting to build have slowed down in actually starting those builds.
So they got the permits in, but they're not anxious to go
They're
get
not.
them out of the ground.
So they're sitting back, waiting to see what's going to happen, and because they don't know if the buyers are going to move forward, right? And so we'll
Or
have
be able to afford it by the time that the home closes.
and I think there's also we've got another month, right, to hear the jobs report. That's been kind of wonky a little bit. So, there's a couple of factors out there that are affecting this affordability side.
And I've shared with you, I was born and raised here in Southwest Florida, and in the past we would have a pretty traditional season. But, over the last, several years, we were seeing that there wasn't really a season. I mean, it was, you could sell your house in the winter, you could sell your house in the spring, you could sell your house in the summer. We don't really have a fall in Southwest Florida. But we're starting to kind of maybe, see that again. I know in one of your updates you had talked about, hey, season's coming. It's going to get cold in the north. Do you see with the values coming down, meaning prices are coming down a little bit, do you see that as a good buying opportunity for those who are maybe sitting up north going, is now the time to act?
It always is. And here's the thing about our little area in Florida. It doesn't track with the rest of the United States, right? So, today I'm going to do one of my own videos, which I do every week on a Wednesday, and I'm going to talk about what the numbers are at the national level. And so the pending numbers from last, week to this week are down 11% in the pending side, right? So it's down from last year, the week after Labor Day, as well. So we're seeing a trend of downward strokes,
right.
And for the rest of most of the United States, it's being winter. So those numbers are going to trail off,
Sure.
But our numbers usually trail up, right? So we'll have to see how that looks. We're still optimistic, and we're going to be reporting about what we're doing. So we go gangbusters now, right? Whether this market looks strong or doesn't look strong, I'm all in. Right. So my marketing's all in, and I'm already pre-planning for Q1. Right. So, we're expanding. Right. So where everybody else is kind of contracting, we're going forward. NAR is predicting a 15% loss in realtors, for this year. I can tell you that that's their conservative number, in my opinion.
Oh, yeah.
And that doesn't include the ones that are going to park their license yet not sell anything.
Right.
And then you're going to have the beginning of New Year that they'll find who doesn't renew, and that'll be the new renews, and there'll be that group that parks their license and doesn't produce. And they're talking about the average realtors averaging 2.5 homes per year, right? So that'll give you an idea of who's carrying who going forward in the real estate market. So there's not a lot of stuff. Not a lot of people doing a lot of performance out there, and the high performance people are the professionals that are carrying the weight, and we'll continue to do that. So it's a tough market out there, and you mortgage brokers know it better than anybody else.
Oh yeah,
right?
I 27 years I've been doing this, and a report came out that said mortgage applications are on a 27-year low, and I'm like, oh, no wonder why things hurt so bad. It's like. And to your point, there's cash. Obviously, cash rules it. The builders with their own mortgage companies, but we're seeing people who have a home right now. They're interested in upgrading into something else, or maybe make a move. In some cases, even downsize, and they're really hesitant to make that move because their rate that they have on a mortgage is 3.5%, 4%, and we're talking about rates over 7%. And now, even though they may be taking a lower loan amount because they've got equity, they're really pausing on making that move because they're like, I don't want to go into it. It's a mind block.
Right.
I'm not going to go into a rate at 7.5%. And we're seeing that as a real struggle. I mean, take affordability is a problem in itself. But even if they can't afford it, are you kind of seeing that where people are just hesitant both on the listing side and the buyer side to make a move because that number, that rate is just an issue in their mind?
I see it on the buying side. I'm a little bit more flexible on the listing side in our area. And a great example is, in one of the zip codes, we just saw a 10% increase in relistings for this week, right? So that's the people who were listed, didn't sell, are now going, all right, season's here. Now's the time to put it back on the market and sell because I had it over the summer and it didn't sell. Right. But you're also looking in one of the zip codes, the average days on market has just gone up to 135. Okay, and then the other one has gone up to 91. So so we're moving the opposite direction.
That's days, not hours, like it was last year.
Yeah, exactly right. That's exactly right. So we still have our sales days on market are 34 days for all of our sales right now. That's changing. It hasn't gone up to that number. Again, we market the piss out of what we do. But we've got some that are laggards, that just haven't moved. And, our condo market is very difficult right now. So, that side of it, you don't want to see what those numbers are. That is even bigger than the 135. So it is difficult out there right now. And stuff is selling. And like I tell some of the new listings that we have, we got another 3 new listings, this week, fresh properties, I always call it fresh meat, right? The fresh meat that looks good is priced fair. It's not a bargain. There's no bargains out there.
Right.
Fairly priced, great looking properties are moving.
Yeah.
So it's just that simple. The other thing that nobody talks about is people are really scared about what's happening with banks out there, right? The noise about whether the banks, my son just called me and told me Chase, when he went to go online, sent him a 125-page document that he had to sign before he could actually go online and do a transaction, which says that document said that the bank is now going to track every transaction he does. Oh, wow. So the whole digital thing is coming. Now he's making a decision on whether or not to move his money out of the bank or not. Before he actually signs that. So those things are all starting to happen. That's everything that everybody's nervous about is starting to happen. The government's coming over to track every dime that we look at. So who knows? Do we go to Bitcoin? Do we go? Where do we go? What are we going to be playing in? Monopoly money? And so there's a lot of stuff going on in the world right now that it is what it is. But.
And we've talked about consumer confidence being something that's extremely important. If you don't have consumer confidence, we can talk about all the facts in the world on paper, but you either feel it or you don't. And, again, obviously we do mortgages, so, we like to talk about mortgages from time to time. And one of the resistances to a better market right now is interest rates. And you talked about builders and builders finding ways to sell homes. And one of the things the mortgage industry has had for quite some time, but really haven't used it in a long time because rates have been low, is a temporary buy down, a 2-1 buy down. Right. And we actually talked about it last year, and it didn't really gain a lot of traction because sellers weren't ready to really kind of put any skin in the game to help with concessions. Are you seeing that a little bit more willingness to do that now?
I haven't. We haven't had the opportunity, and I'd like to be able to try it because we do have some sticky properties out there. And I think that if we could come up with a good way to present that plan in a marketing way for us, that I can actually put in a marketing plan and actually market that plan, with a property, I think it might gain a little bit more. I've got to sell that plan to my sellers. Right. But I think because of those properties that are on the market a little bit longer, I think they would be a little bit more receptive to those ideas than just throwing, reductions.
Dollars.
So I've got a couple of them in mind right now that, I knew we were going to be talking about this, that, after the show, I'd like to talk about how we can package that. And I presented to them, when I get back.
We'll give our audience a little bit of an idea, how this works, because to your point, people who are maybe have their listings have expired, they want to relist, they're probably reconsidering the price. Right. So instead of, dropping the price $10,000, which if you have a finance buyer, that may change their monthly payment, $70, $80. I mean, that's not making a huge difference in their monthly output, which is what they're looking at when they're going to go buy a house. Is, oh my gosh, insurance costs are up, everything's up. Oh, this is expensive, right? But instead, using that money toward a 2-1 temporary buy down. And in short, the way it works is you take whatever the current market rate is today. In the first year, it's a 2% discount on that rate. So let's just have fun, and let's say you go from 7.5 to 5.5 the first year. The second year, then you go from 7.5 to 6.5. So, you basically start off your loan at 5.5, 6.5, and then the rest of the time at 7.5. The idea being is that rates do eventually come down in that first 24 months, where you can refinance into something a little bit better for the permanent 30-year fixed, right? And this is a 30-year fixed mortgage. It's not an adjustable rate. It's not a neg am. This is just taking seller's money, which round numbers, depending on the loan amount, can be anywhere from $10,000 to $12,000. And they're taking that money and they're subsidizing the mortgage payment for those first 24 months. So, we just did one that's going to be closing this week, a $480,000 mortgage on roughly a $600,000 price. So the seller, instead of taking a $12,000 reduction in price, which again would have only benefited the buyer on their monthly payment by $70 or $80, they took that money and they said, well, okay, we're gonna do a seller-funded 2-1 buy down with that $12,000. So the first year, that buyer saves $634 a month on their mortgage payment. Right. So, they look at a mortgage payment that was, over $4,000 and now knock $600 off of that. Man, now that's a little bit more appealing. Again, if you knock 10 grand or 12 grand off the house, it didn't really, make them do a dance. Save $600 a month for 12 months. It does. And then after that, it, was going to save them another $323 a month in year 2. So they save $600 and change year 1. They save $300 and change year 2. Now that's something to talk about,
right?
And they don't have to really worry about that rate going to today's current market until year 3. So that benefited a buyer because they now didn't just look at the price of the house. They were looking at, hey, I'm actually getting in on this house at this price at a payment that I can't get, in the current market,
right?
And that helps, obviously sell a house. So it's a mechanism to bring buyers and sellers kind of, together in an environment that, is obviously challenging.
And they're gambling that they'll refinance at a somewhat lower rate.
Yeah, absolutely.
And if they do get the rate at roughly 1.5% to 2% lower, they'll get either that $300 back or maybe.
That's right. Yeah. So
500.
So depending on the timing of it, they any of that subsidized money that isn't used, they can get back if they refinance. I'm obviously telling the clients, at this stage, flip of the coin when rates are going to come down. But historically speaking, once inflation really does start to come down, mortgage rates follow. And as you pointed out with all the data, the data is just.
And if it came down faster, sooner, they can refinance.
Absolutely, at any time. And then any money that wasn't used in that. Seller contribution just comes back to them. Yeah, so
that is a great option.
It's a great option for those who are financing, obviously, right? If you got a cash buyer, they're going to take the discount on the house. But I think there's a pool of people that are sitting on the sideline that are finance buyers that are just not acting because all they're hearing are rates are the highest that they've been in decades. Rates are the highest they've been in decades, and that's true.
Yeah.
But this type of a mechanism has been used by builders for a long, long time. You look at some of the builders, they do permanent buy downs for the buyers, but the 2-1 buy down was a way to get people in the door for decades.
We just haven't had the need for it.
Right. Yeah. So, hopefully it'll be something to kind of bring, buyers and sellers together in this tough market.
Well, like I said, we'd like to work with that and figure out how to package that, and I'll do a video. I'll do a presentation for our customers, and then I'll try to figure a way to package that in a video for some of our listings and actually present it in the listing video.
See if we can kick up some dust and bring back Phil Zilla, maybe. Wouldn't that be fun?
That would be.
Can you tell our audience a little bit how to get a hold of you and Jennifer?
Yeah, absolutely. So you can get in touch with myself and Jennifer at mydigitallisting.com or myheritagelanding.com. Our number is 941-219-5659, and that's our main marketing line. Or if you want to get in touch with Jennifer herself, it's 941-229-0111. She's our feet on the ground. She knows all the properties, all the places where you want to be. If you want to buy a property, she's the one to talk to. If you want to list a property, give us a call. We'll make sure we take care of you. perfectly.
Nathan Davis here with Community Lending, More Than Mortgage Podcast, 239-898-8841. Phil, it was fun to be on this side of the table with you for the first time.
Man. Absolutely.
Look forward to doing it again.
Absolutely.